Dear students, welcome to our channel. In this video, let us discuss about goodwill, its nature and valuation. This is chapter 2 for class 12 CBSE Accountancy part 6 video. I have already posted 5 videos for chapter 1 and I have given the link in the description. Make use of it. Now, goodwill. What is goodwill? When I ask you to name some companies, immediately you will be giving the names of these companies. What made you to recall the names of these companies? How could you remember and tell these companies immediately? And we also know that Facebook is an pioneering social media company and they had all the financial affordability to build a company like WhatsApp or Instagram. But still, they spent billions of dollars to buy WhatsApp and Instagram. And Reliance is a financially mighty company in India. They could have built a company like Just Dial. But why they pay so much of money to buy the Just Dial? Likewise, Tata bought Land Rover and Jaguar. Adani bought NDTV. What made these buying companies to make a decision to spend so much of money for buying these other companies? And what the selling companies did such a wonder to sell their company for an high value? They have earned, the selling companies have earned more money than their mainstream of business. How this happened? The answer is the goodwill. Goodwill is the reputation. Because of the high reputation built by the selling companies, they could able to make so much of money when they sell their companies. Goodwill is an intangible assets. It helps for a company to earn more profits than what actually they expect. It is a long built reputation. The delighted customer becomes a loyal customer and they drive the goodwill into the company. In case of partnership, the share of profit sacrificed by the sacrificing partner creates the goodwill for a partnership firm. What factors influence the goodwill? The efficient management. How well you manage the man, machine, money, methods, all these things, materials, all the 5 M's you manage well. This brings a goodwill. The favorable location, where your firm located, where your business is located, it adds value for the goodwill. Favorable contract, with whom you do the business. This gives an goodwill. And customer satisfaction, as I said, the delighted customer drive in the goodwill for the company. Years of establishment, the consistency in the business, how long you are continuing in the business. A decade or a centurion company, the longer you stay in the business. This is a reputation for a company. Patent holding, your creativity, how much you spend for your research and development, how well you build the new products. This brings the goodwill. The access for supply for various sources also contributes for goodwill. The product quality, how you give the products at the international standards in the local market. This brings you goodwill. And market situation, how you turn the market towards your company. Whatever may be the stiff competition because of the foreign companies or any other aspects, you have a complete grip over the market. This is a source for goodwill. The risk of business, how far you could be able to give a unique product that competitors could not able to imagine to be near to you. That is, it is almost close to a monopoly situation. This gives an goodwill for the company. Nature of business. Here you are into a business where the supply for the goods is very much limited, but need for the goods is very high, and you could be able to sell the goods. This creates a goodwill for the company. The past performance, how well you did in the past, giving a greater product and creating a brand value, all these things drives goodwill for the company. What are the situations we need to value the goodwill in case of partnership firm? When the partners change their profit sharing ratio, when a new partner gets into the firm, or when an existing partner retires, or during the situation of a death of a partner, when the firm want to sell their business, or when the firm wants to join with the other company to do the business, or when a partnership firm want to get elevated as an company. In all these situations, the goodwill is valued. Methods of valuation of goodwill. Firstly, we will discuss theoretically what are the methods of goodwill valuation. The goodwill is valuated under three methods: average profit method, super profit method, and capitalization method. Under average profit method, again the goodwill is valued in two methods: simple average and weighted average. In simple average method, firstly, the average business profits is estimated. While arriving the average business profits, the abnormal gains and losses, non-business incomes and expenses, errors committed in the past, all these things are adjusted. The abnormal gains, when you sell asset, you earn a profit, or some fire accident happens in the premises, you had some loss. These are abnormal situations, and the gain or loss happening are adjusted in the normal business transactions, and you arrive the average business profit by adding the profits for few years and dividing it with the number of years. By this you arrive the average business profit, and you get the value by multiplying the average business profit with the number of years of purchase. Then weighted average profit method. Here also you adjust the abnormal gains and losses, non-business incomes and expenses, errors committed in the past, and you narrow down your profit with exactly you earn with the business transactions. Here you attach a weight for a business profit for a particular year. The business may be in the different phases of the business cycle: introduction stage, growth stage, maturity stage, decline, saturation, different phases. So you attach a weight for the different years and get the total weighted profits, and you divide it by the total weights. This will get you the weighted average business profits. Multiply with the number of years, you get the goodwill for the firm. The next method is the super profits. Under super profits, super profit is the concept that you get an extraordinary profit than the normal profit what you expect from your due course of business. This super profit is arrived by getting the actual average profit, deducting the normal expected returns from the business. The actual average profit is totaling the profits for a few years and dividing it with the number of years. And the normal profit is calculated as a percentage on the capital employed. For estimating the capital employed, either you apply liability side approach or asset side approach. Then capitalization method. In this we have two methods. The first one is capitalizing the value of the business. For this you arrive the average profit. The average profit is arrived by adding the profits for few years, dividing it with the number of years, and then getting the average profit, you divide it with the normal rate of return. Here you arrive the goodwill by getting the capitalization value of the business. From this you deduct the net assets. The next method under capitalization method is the super profit method, capitalizing of your super profit method. We already discussed super profit is the profit you earn more than what you expect. Now getting the super profit and dividing it by the normal rate of return will get you the goodwill under the capitalization of super profit under capitalization method. Now we will discuss few problems in estimation of the goodwill. Now we will discuss a problem on goodwill valuation, and this goodwill valuation is to be made in average profit method, and we will be given with certain adjustments, and these adjustments are to be made. We are given with a question situation that Mrs. S purchased Mrs. A's business and it was agreed to value the goodwill at 3 years purchase of average normal profit. That is, the average profit is to be estimated and it is to be calculated based on 3 years purchase. Now certain other details are given. Now to start working, as usual, what we will do is we will break the question details into small ends. Mrs. A purchased the business of Mrs. A. S purchased Mrs. A's business and we are asked to value the goodwill. Value the goodwill on 3 years purchase of the normal profit. 3 years purchase of the normal profit of the last 4 years. And we are given with the profit details for 4 years. And certain other details are given. That is, an asset was sold at a gain. An asset was sold at a gain of rupees 10,000 and a machine was destroyed in accident and 30,000 was written off as loss. Then the firm's asset was not insured. The insurance premium was not insured and the insurance premium of rupees 10,000. To start working on this, we will discuss a point about the abnormal loss and abnormal gain. The abnormal loss or an abnormal gain happens in a business situation due to unexpected activities. That is, an asset transfer may be made. It may lead to an profit or a loss in the business, or some industrial accident, a machinery destroyed. Such things might have created an unexpected loss. This abnormal gain or abnormal loss might be considered and the final profit for the year might have been arrived. But to estimate the exact profit or exact loss, business loss for a particular financial year, this abnormal gain and the abnormal loss are to be adjusted. That is, the abnormal gain is not an actual business profit, so it is to be deducted. The abnormal loss is not an actual business loss, so it would have been considered in the previous profit estimation. It would have brought down the profit. So abnormal loss should be added back to the business profits. Now in this case, we are given with 3 situations that an asset was sold at a gain of profit of 10,000. Means this asset was sold and it created a profit that was already included in the business profit. So it should not be considered. It is to be deducted. Then the next case is a machine was destroyed in accident and rupees 30,000 was written off as a loss. This is an abnormal situation. The machine accident is very unusual and it created a loss. This 30,000 should not be added to the considered for the profit estimation. So it would have brought down the profit because earlier it was considered. So it is to be added back to the business profit. Then the third situation is a firm's asset was not insured. That is, the insurance premium amounting to 10,000. This was not paid in that particular financial year. This might have been included in the profit. So this is to be deducted. Without considering or without making the payment of insurance premium, the asset was not insured. This 10,000 might have not left the business and it would have been added in the profit. So it is to be deducted. So in this question, we have 2 abnormal gain situation and 1 abnormal loss situation. And we are given with the details for 3 years on 31st March 2020, 31st March 2021, 31st March 2022, 31st March 2023. We are given with the profits, that is after adjustment profits, 90,000, 1,60,000, 1,80,000 and 2,20,000. And as I said, the first is for the adjustment of the asset sold in gain. It is an abnormal gain, so it is to be deducted. The second situation is an abnormal loss, industrial accident, machinery destroyed. It would have brought down the original profit of the business, so it is added back. The third situation is default in the payment of insurance premium. It would have remained as a part of profit, so it is to be deducted. Adjusting all these things, So the normal profit for the business is 80,000, 1,90,000 and 1,70,000. In the last year, there is no such a abnormal gain or loss, so it remains the same. Adding all these things, we have 6,60,000 as the normal profit. Now estimation of average profit. Estimation of average profit. It is nothing but the total normal profit divided by the number of years. The total normal profit we have estimated in the above table. It is 6,60,000 for 4 years. So it works out to rupees 1,65,000. So goodwill, we are asked to estimate the goodwill based on the average profit method. Average profits for the into number of years. In this question, the goodwill is the average profit is rupees 1,65,000 and it is to be computed for 3 years. So working out this, the goodwill is rupees 4,95,000. This is how the goodwill is to be calculated on average profit method. Next question in goodwill valuation. We are given with the details about 3 partners and the profit and loss details for a duration of 5 years and few more details are given. In this question, we are given with the detailed data on a particular year, that is for the year ending 31st March 2023, the company has incurred a loss, that is 22-23 it was a loss for the company. And for this particular financial year, they have also given some details that during this year, the company has bought 5 cycles costing rupees 20,000. But it was wrongly debited, that is it was wrongly included in the traveling expenses. Whenever any asset, here the cycles purchases is to be considered as an asset purchased. Whenever any asset purchased, the entire cost should not be deducted as an expenditure in the profit or loss account. Only the depreciation for that year is to be considered. Here depreciation is given as 25%. In this question, the entire cost of the asset, that is the cost of 5 cycles, was been wrongly included in the traveling expenses. This would have brought down the profit for that particular financial year. To arrive the exact profit, we have to add back the cost of the cycles and deduct the actual depreciation for that particular year. Now for this, we will be working out a statement, that is working note for estimation of adjusted loss as on 31st March 2023. The year 2023 is a loss and we are adjusting, that is adding back the cost of cycle purchased and deducting the actual depreciation for that financial year. Firstly, loss for the year. Loss for the year is given, loss for the year, that is as on 31st March. As on 31st March 2023, it is given as rupees 1,20,000. We are writing inside the bracket for the reason that it is a negative value, 1,20,000. It's a negative value, loss. And what we are doing is we are adding back the cost of cycles. This would have brought down the profit. So we are adding back the cost of the entire cost of the cycles purchased. Wrong debit in profit or loss account. This is going to be added back. The amount that we are going to add back is rupees 20,000. 1,20,000 negative value, 20,000 is a positive value. So when we add back this, we will be arriving 1 lakh rupees as a negative value. 1 lakh rupees negative value. Now with this, we have to deduct the actual depreciation. depreciation for cycles, and it is given that the depreciation for the cycles is 25%. The depreciation rate is 25% for rupees 20,000. The entire cost of the asset, that the cycles is 20,000. This is to be actually deducted. So it works out to 5,000. So already a negative value. This is another negative value. So it is 1,05,000. This is going to be the actual loss for the year. This is going to be the actual loss for the year. Now, for the estimation of the goodwill, first we will calculate the normal profit, average profit. That is, we are given with the details about 31st March 2019, 31st March 2020, 31st March 2021, 31st March 2022, and just now we have calculated the value for 2023. In this question, we are given with the values as 30,000, 70,000, 1 lakh, 1,40,000, and the loss that we have, adjusted loss that we have arrived in the previous working note. Consolidating all this value, we arrive 2,35,000. Now we have to get the average profit. Average profit for these 5 years, it is total normal profit divided by the number of years. Total normal profit is 2,35,000, and number of years 5 years, it is rupees 47,000. Now goodwill valuation. Goodwill, it is average profits into number of years purchase. That is, goodwill is the average profit. Just now we arrived it as 47,000, and it is given in the question that the goodwill is valued at 4 years of purchase. So that is 4 years. It works out to 1,88,000. So this is how the valuation of goodwill is done under the average profits method. Next question in goodwill valuation. We are given with the question details about a firm. They have earned the profits, and we are asked to estimate the goodwill. In this question, the goodwill is to be estimated on weighted average method. We are asked to apply the weighted average method to evaluate the goodwill, and we are given with the weights for 5 years. The 5 years of weights are given. Now the question details, we will, the years 31st March 2019, 31st March 2020, 31st March 2021, 31st March 2022, 31st March 2023. We are given with the profits for all these years: 40,000, 48,000, 60,000, 50,000, 36,000, and we are given with the weights 1, 2, 3, 4, 5. Now we have to multiply the profit with the weights: 40,000 into 1, 40,000, 48,000 into 2, 96,000, 60,000 into 3, 1,80,000, 50,000 into 4, 2 lakhs, and 36,000 into 5, it is 1,80,000. So it is 6,96,000 is the total of the weighted profits. Now average profit is total weighted profits divided by the total of the weights. Here we have to calculate the total of the weight. It is 15. Total weight, it works out to 6,96,000, and the total of the weight is 15. So when we divide, we get rupees 46,400, and the goodwill is weighted average profit into number of years purchase. Weighted average profit into number of years in number of years purchased. That is goodwill is equal to rupees 46,400 into 3 years. We are asked to calculate the goodwill considering 3 years of purchase. So it is rupees 1,39,200. This is how the goodwill is calculated on the weighted average profits method. Next question in goodwill valuation. Here in this question we are asked to calculate the goodwill based on the super profit method. The term super profit means a business firm expects to earn certain amount of profit, but the actual profit earned was more than the expected profit. Such a profit is said to be the super profit. In this question we are given with the profit details for 3 years and the capital invested in the business is rupees 60,000. The firm's expectation is 10%. That is, the firm is expecting to get a normal return of 10%. In this situation, we are asked to calculate the value of goodwill on the 3 years purchase of the super profit. So we will work out the goodwill based on the super profit method. For that, firstly, we have to estimate the average actual profit received. That is average profits earned. The company gives us the details on the 3 years purchase, that is 3 years profits, 31st March 2023, 31st March 2024, 31st March 2025. We are given with the actual profit earned in these 3 years, 18,000, 20,000, 22,000. Totaling it, we get 60,000. Now, we will estimate the actual average profit earned. The actual average profit is total profits earned divided by number of years. That is, the total profit earned is 60,000 divided by number of years is 3. So the actual average profit is 20,000. Now the goodwill is to be evaluated. Before that, we have to calculate the normal profit. The normal profit, this is the expectation of the firm that they will earn certain amount of profit on the capital they have invested. This is calculated as a percentage on the capital invested. So capital invested into normal rate of return, that is normal profit equal to the capital invested is given in the question as 60,000 and the normal rate of return is 10%. So it works out to rupees 6,000. This company has invested an amount of 60,000 and they are expecting a return of 10% on the money that they have invested, that is rupees 6,000. The company actually earned an average profit of rupees 20,000. Their expectation was only 6,000. So the profit, the actual average profit exceeding the normal profit is the super profit. That is, super profit is equal to average profit, actual average profit earned, less the normal profit. That is, the company, the difference between the actual average profit and the normal profit. So super profit is the actual average profit is 20,000 deducting the normal profit of rupees 6,000. So the super profit is 14,000. The company expects to earn an amount of 26,000 but they get 20,000. So they have exceeded the expectation. Such a situation is said to be the super profit. Now as usual, the same formula for goodwill. Goodwill is equal to super profits. Since this is super profit method, we multiply the super profit into number of years purchased. Number of years purchased, that is goodwill equal to the super profit we have estimated as 14,000 into, we are asked to calculate the super profit method of goodwill for 3 years of purchase. So it is working out to 42,000. This is how the goodwill based on super profit method is estimated. Okay students, we will continue few more problems in chapter 2 Goodwill, Nature and Valuation in our next video. Your like, share, comment and subscription to the channel may encourage me to post more such videos. Thanks for watching.